Hello, it's Castaway Trader and welcome back to my YouTube channel. Today we will be talking about a simple idea which will help you to make money in the markets. If you want to make money in trading, all you need to do is to learn that simple move. Before we start, please read that important disclaimer. This is how my website looks like. It's located at www.castawaytrader.com. This is where I post regular updates for my subscribers, and from time to time I post free updates for any registered free users. What I'm gonna show you is a simple method which you can easily learn and apply in your trading. It does not require you to spend a lot of time over books. It does not require you to pay a fortune for a fancy formula or some crazy indicators. All you need to know is to count moves in stock market and just to label them with three letters: A, B, and C. I want to show you that the market does not move in a straight line. We can break down any move into a sequence of simple steps. It's like dancing. Mr. Market keeps dancing. 1, 2, 3 move in one direction, followed by 1, 2, 3 move in another direction, and then again 1, 2, 3 move in one direction, and again 1, 2, 3 move in opposite direction, and finally again one move, another move, and another move. That's another 1, 2, 3 move higher. 3 steps forward, 3 steps back. This is all what Mr. Market keeps doing all the time. This is the natural rhythm of the market. It's like in dancing. If you know simple moves, you can keep repeating them again and again, and the repetition of those simple moves creates the flow. Now, I want to show you how we label those waves. Here you can see we label the first ABC move up of the low as wave 1, ABC down that follows we label as wave 2 down, another ABC up we label as wave 3, another ABC down we label as wave 4, ABC up we label as 5. This is just a conventional way how we do that. It doesn't make special important meaning. You can label it with anything you like. You can call it a dog, you can call it a cat, a mother, a father. Doesn't make much difference. What makes the difference is that every ABC up is normally followed by ABC down. And here you can see the 5 wave up fractal, because you can see 5 waves. Each of those waves is subdivided ABC. ABC up, ABC down, ABC up, ABC down, ABC up. I call the 5 wave fractal the backbone of a trending move, because it's a sequence of higher highs and higher lows. Here you can see the top of wave 1 makes the high higher than the previous high made by subwave A of wave 1. Subwave A of 3, the first move in that ABC, which becomes wave 3, is higher than the top of wave 1, and the top of wave 5 becomes the highest high, which is higher than all the highs made by the preceding moves up in wave 3, in wave A of 3, in wave 1, in wave A of 1. The very same similar principle applies to lows made by corrective moves. Those waves which are colored in red, ABC down here, B down here, ABC down here, and B down here, they are called corrective waves. They are just temporary pullbacks on the way up. Here you can see that every corrective wave makes a higher low. Look at that low. The low of wave 2 is higher than the low of preceding pullback in wave B down. The low of the corrective wave B of 3 makes a higher low than the low made by corrective wave 2 down, and the low made by the corrective wave 4 is higher than the low made by the preceding corrective wave in B of 3, and finally the very last corrective wave B of 5 makes a higher low over the low made by the corrective wave 4 down. This is a foundational principle of the 5 wave up fractal. It's a sequence of higher highs, those ones, and higher lows, those lows made by corrective waves. Those corrective ABC waves make great long setups because we know that they cannot go lower than the preceding low of the preceding corrective wave, and we know that because that 5-wave up fractal at this point, at this point, and this point, at that point is not completed yet, because we have not got full 5 waves up, we still can expect continuation higher, and any ABC down may be used as a great long setup. Moreover, those waves B of 3 and B of 5 are supposed to subdivide into ABCs of smaller size, we call it of a lower degree, and if we zoom in, we will see that subdivision ABC, ABC, and this is exactly what I am going to show you in this video, how you can use that simple technique, first identifying the bigger fractal in play, which points higher, and then going into the lower time frame up to 5-minute chart, and then you just wait for every ABC down inside that bigger 5-wave up fractal, and you go long, and you will be amazed how accurately and efficient that simple method works. I want to point your attention that every subwave A and C in waves 1, 3, and 5 is itself structured as 5-wave fractal of a lower degree. Here again we have our 5 waves, but only 3 of those waves point in the direction of the main trend, particularly wave 1, wave 3, and wave 5. Specifically, only subwaves A and C inside those waves 1, 3, and 5 point in direction of the main trend, while waves B inside wave 1 and inside wave 3 and inside wave 5 point in a counter trend direction. And what is really interesting, it's so-called the fractal nature of the markets. Those waves A and C, which are marked in thick blue lines, are themselves subdivided into 5 waves of a lower degree, and this is a subdivision of every wave A and C. What that means for us, that we can find more setups if we go to the lower time frame. This is how it looks. Inside each wave A and C of bigger time frame, we have the very same 5-wave fractal, but of a smaller size, and inside those 5-wave fractals of a smaller size, we will see the very same structure and the very same idea. Every ABC down would be a great long setup. What really important to understand that ABC down makes a great long setup under 2 conditions. First, the starting point of that corrective ABC should be a higher high made by that preceding impulsive wave. We call those blue waves moving price in the direction of the main trend higher, higher, and higher impulsive waves, because we push price in the direction of the main trend, and those waves have impulsive subdivision. They themselves are subdivided into 5 waves of a lower degree. So every time we have another push higher, and we keep tracking a bigger 5-wave up fractal, and we get ABC down, which itself makes a higher low, that's a high probability long setup. I talk more about that kind of simple yet efficient setup in my professional trading course. This is where I explain how you can enter those ABC downs, how you can set a stop, and how you can set a profit target. This is of course an oversimplified picture. Those ABCs may be shaped in different waves, and in my introductory video course I explain several most common types of those ABC corrective patterns. So you can subscribe to my introductory course and you will learn a lot more about microstructure of every common type of ABC corrective move down or up. That would help you to pinpoint the termination point of the final subwave C in your real trading life. This is how the introductory course looks like. It's called Predict the Market with Harmonic Elliott Wave Analysis, and you can subscribe to that course on Udemy platform, and I will provide a link in the description to this video. This is the second course, which is called How to Trade Like a Pro, how to use wave analysis to find winning trading setups. And as you can see, those two courses are highly rated on udemy.com, which is the largest and well-known educational platform in the United States and worldwide. You can use a coupon code YouTube20 to get 20% discount. The discount is valid until September the 1st. Now I'm gonna show you several charts I sent to my subscribers, and I will show you real-life examples where that simple idea of ABC corrective moves can tremendously change your trading and finally will let you make money in the market consistently again and again. Before we start, I want to remind you that I have a private premium chat where not only I explain you what setups I see and what predictions I make, but I also share my own trades not only in ES, NQ and RTI futures, but also in a number of triple ETFs. We also closely track gold, silver and gold miners, and this is where you can learn a lot about the way how I trade. If you are a more professional and experienced trader and you do not need to get such a close guidance from me, but you want to know what I see and the bigger picture and to know what directional bias I may have at every moment, you can subscribe to regular alerts sent to your email and post it on my website, and that package is available for $49.99 per month, and that would include coverage of ES Mini, NQ Mini and Russell futures, and I will be sending you updates several times a day, starting before the opening bell at 8:30 a.m. or 9 a.m. in the morning until very late evening. In addition to that, I will also send you my updates on volatility, tweaks and VXX, and sometimes counts of volatility really helps me to pinpoint the exact next move in the market. Let's come back to the daily chart of S&P 500 index, and you can see that even on a bigger time frame, from time to time we get those beautiful ABC corrective patterns which become long-term setups. And here you can see a pullback which started at the top, made in September 2018, and it's a textbook A down, B up and C down. That was the completion of a corrective wave 4 down and a start of a strong rally in wave A of 5. And as you can see on this chart, my bullish primary count still expects that we can get another higher high before we can declare that wave A of 5 completed and a bigger pullback in wave B of 5 starts. But even after that pullback, we still need to get another final push high in wave parenthesis C or parenthesis 5, which would finally complete a huge rally started at the lows of 2009. Why I show you a daily chart? Because you need to understand what's going on a higher time frame. If you are dealing with an unfolding 5-wave up fractal on a daily time frame, you know that the long-term bias, directional bias, is bullish. If your long-term directional bias is bullish, then you can go to a lower time frame, to 4-hour charts, 2-hour charts, up to 15 or 5-minute charts, and you will be looking for a great entry point because you know that the trend looks higher, and you just wait for a pullback to go long and to enjoy continuation of a rally on a bigger time frame. This is 4-hour chart, and here you can see a chart I posted to my subscribers on August 6th on last Tuesday, early morning before the open. You may remember that the previous Monday we had a crash type of decline, and it was a very strong decline. But what you can see here on this chart, that strong decline landed right into the green target box I set well in advance, and it actually made a higher low in comparison to the low made at the beginning of June. And even that low made at the beginning of June was higher than the preceding important major low made by wave parenthesis 4 down in December 2018. So here you can see the very same principle, that the bullish trend is fully intact because market keeps making higher lows and higher highs. So here you can see that high made a higher high. So here you can see that wave A of 5 made a higher high over the preceding top made by rally in wave C of 3. And even on that scale, on 4-hour chart, you can see another textbook ABC move down, which looks in the very same way how the same ABC move down looked at a daily chart. The correction started in September 2018 and completed in December 2018. And this is another ABC down that happened in May, June 2019. Completely different time frame, but the very same look and the very same result. Another strong rally started at the point where the final wave C got terminated. We got another rally which quickly pushed prices back up to the previous top made by the top of wave C of 3, basically the starting point of that ABC down. Another example, another ABC down corrective pattern and another long setup. Back then I posted that NQ among two alternative counts I still favor the primary bullish one. So I kept posting that the market has a bullish bias despite so many bearish calls. And this is again NQ mini 240-minute chart. Now let's switch to 15-minute charts. This is Wednesday, August 7, and this is what I wrote to my subscribers. We got a really strong rally as I expected after that spiky move down which bottomed overnight last Monday, August 6. Then we got the first leg up, and I kept telling my subscribers that even if that move is a corrective move under the bearish micro count, we still need to get another leg up in wave C, which would complete wave 4. That was a pessimistic bearish scenario, but even under the bearish scenario, that pullback had more legs to go higher. I wrote most likely microwave B down, this is B down I'm talking about, has bottomed, and we deal with the starting wave C up. If this is wave CO4 up under the bearish micro count, then that wave C up has to top under the critical resistance of 29.45. This is the critical resistance 29.45. And again, look, another ABC. That ABC is a bit fancy because that micro B managed to make a higher high over the starting point of wave A down. This is so-called expanded flat structure, and this is why I recommend you to take my introductory video course where I provided a lot of details about the way how you can identify that structure, what is the main features of that structure, and I showed several real-life examples. So we got ABC, and I managed to almost pinpoint the bottom of that structure and explain to my subscribers that we should get another rally which can go as high as 29.45. And this is what we got. We got a really nice rally which topped a little bit lower than 29.45. That simple ABC long setup delivered 120 points rally in 48 hours. You did not need to know any fancy techniques. That simple idea that any corrective move should be structured as A up, B down, C up, and the idea that any corrective wave B has to be structured as another ABC of a smaller size was everything you had to know to nail that rally, to make really good money in that rally. Monday, August 12th, start of the previous week. we are getting another micro ABC down and it bottom right into my green target box, and then we got another quick rally, another 33 points rally just in 3 hours. And look what happened next. That was a quick rally, and I always tell my subscribers to be suspicious about that kind of a rally, and because that could be just a spiky corrective move up before another decline. And this is exactly what happened back then. We got another ABC down, and here we are dealing with another type of corrective pattern people call the double 3 or WXY pattern, which is essentially just two ABCs. This is ABC1, ABC2 connected by a technical wave X. So that crazy move up, fast move up was the technical wave X, the starting point of the second ABC move down. And that is another long setup, and I explained the double 3 corrective pattern in my introductory video course as well. Tuesday, August 13, 2019, that corrective pattern, complex corrective pattern, double 3 pattern, delivered 67 points rally in 24 hours. That was our double 3 pattern, and this is another spiky move high. And again, in my premium chart, I explained to my subscribers that every time we get such a spiky move high, it could be another wave X. So here we are talking about ES Mini 240-minute chart. The previous spiky move high happened on 5-minute chart, so you can see that the very same principle happens again and again on a very different time frames. This is what I wrote to my subscribers. There is another possibility where that spiky move up is just a corrective wave X up to be followed by another ABC move down under the double 3 corrective structure. I cannot assign high probability to that count. That is why I will not short here. But if we get now a corrective ABC move down assumed by the chart, and that ABC makes a lower low under the low seen this morning, I will consider it as a completion of subwave Y of corrective wave 2 down and a nice long setup. And this is exactly what we got. We got a drop. We got a drop and we got another ABC move down on 5-minute chart, and I wrote to my subscribers on Thursday at close that I am switching to a more bullish count. I think wave 2 down is complete, and we may rally to 3000 in subwave A of 3. This is the target for the move up in wave A of 3, and that could follow with another pullback in wave B of 3, and then another more stronger push high in microwave C of 3. So in general, you can see that that was the low made by wave 4, that was the top of A of 5, that was the bottom of wave B of 5, and from here we are getting another move high in the final wave C of 5 that is supposed to finally complete a bigger rally in wave A, which we label as capital A, the rally that started at the lows of December 2018. And here, Friday morning, I posted it at 2 a.m. in the morning Eastern time before the market opened, and from here we should get rally that may keep going up to 3020 in wave A of 3. So the very same simple long setup, the very same ABC down produced another great long setup. Look at this microstructure. This is the chart I discussed with my subscribers in my premium trading chart, and I showed to them that we got A up, B down, and C up, where wave C of micro wave 1 up tagged 123.6% extension of the first leg up, and this is the place where we can start seeing some pullback. So any micro ABC down from here would be another great long setup. Let's come back to that ABC down which we got in the middle of the last week. From the bottom of that ABC down, we have already got 78-point rally, which if to measure by the close on Friday. And that rally is nowhere close to be completed. So I still expecting it to keep stretching higher. If we look at that micro 5-minute chart, we can see the low made last Thursday. And that was the low made by the wave 2 down. Off that low, we should get another micro 5 waves up, which would only be wave A of 3 targeting 3000. Because market never moves in a straight line, but always keep moving 3 steps higher and then 3 steps back lower, we can apply the very same principle to that very micro chart. We got ABC up, and here we may get ABC down, where that ABC down should make a higher low over the low made on Thursday last week. And if we get that ABC down, I will go long again, because this is the natural rhythm of a market. This is the dance you can successfully dance with the market without any need for any indicators, for any sophisticated trading methods or formulas. What is the key takeaway from the video today? If we can identify an unfolding 5-wave up fractal on a higher time frame, we can confirm an active trend up, unfolding trending move up, and we can set a bullish directional bias. Active trend up and the bullish directional bias let us use any corrective ABC move down as high probability long setups. As you can see, that is very simple method, and you can learn it pretty quickly, and that would tremendously improve your trading. Thank you for your time. Thank you for watching this video. Please like this video. I would appreciate any feedback. Keep counting waves and make money. Goodbye.